Hey, what's up, everybody? It's Doug Shoemaker here with the Shoemaker Loan Team at Homestead Financial Mortgage with your weekly market update. And for my friends out there who just want to know what time it is, you don't have time to watch a long video about all these details. I'm going to start for you with a quick version. The private sector lost 32,000 jobs in September, while economists were actually expecting a gain of 50,000. I don't know about you, but that's a bit of a miss as far as I'm concerned. The government shutdown actually means that official jobs reports and unemployment data they're going to be delayed though. So this most recent ADP report, it carries some pretty heavy weight. Now, home prices are still up year over year, but that growth is slowing a little bit. And pending home sales jumped 4% in August as lower rates sparked a little bit of a rebound in buyer activity. And finally, mortgage bonds are holding above their 25-day moving average, or they were until today. They closed a little bit below that. That was a good sign for mortgage rates, and as long as we see them open above that or close above that 25-day moving average tomorrow, that good trend is probably going to continue. Now, as of today, if you're in the process of buying or refinancing, I would consider carefully floating that interest rate. If you're closing in the short term, like within maybe a week or so, you want to make sure that you're in really close communication with your lender because the market can change at any time. And make sure that they've got the ability to A, understand what's going on with the market, but B, that they can lock you right away if something turns really quickly. Now, outside of that short window, we might see rates improve a little bit if the job numbers continue the trend they're currently on. Now, for those of you who like to build the clock and like to understand how all the gears fit together, let's go ahead and do a deep dive here. According to ADP, the private sector, as I said earlier, lost 32,000 jobs in September. Again, a really huge miss. Now, even August report was also revised down from a gain of 54,000 to a loss of 3,000. So job losses were spread pretty much across the board. Small businesses cut about 40,000 jobs, medium-sized firms lost 20,000, and 7 out of 10 sectors actually declined. The only real bright spot was education and health services, which added 33,000 jobs, and large companies that have 500,000 employees or more, they added 33,000 jobs as well. Now, wages are still growing, but the pace is kind of cooling down a little bit. Job switchers saw a 6.6% annual increase, and that was down from 7.1% that was reported last month. Now, job stayers saw about a 4.5% increase. The bottom line here is that job growth is definitely slowing, and the private sector has now posted losses in 3 of the last 4 months. So, as ADP's chief economist said, despite the strong growth in Q2, employers are getting pretty cautious with their hiring. Now, normally we'd be talking about the Bureau of Labor Statistics, the official jobs report right now, but with the shutdown, the data has been delayed. So, along with weekly unemployment claims, this matters because the Fed just cut rates on September 17th, and they're kind of walking a tightrope between inflation still being a little bit above the target, but the jobs market is clearly weakening. So without the BLS data, the Fed's going to have to rely pretty heavily on this ADP report when they come up on their October 29th meeting so they can decide what to do. Now, here's a quick refresher. Remember, the Fed adjusts the Fed funds rate, which affects short term lending between banks. It doesn't directly set mortgage rates, but it heavily influences them. Mortgage rates move with the bond market, which reacts to Fed guidance, inflation data, and, yep, the jobs report. Now, job openings in August, they actually ticked up slightly to 7.2 million. And that's about what analysts expected. But that's still way down from over 12 million openings back in 2022. Even more telling, the quit rate is just 1.9% near decade lows. People aren't confident about switching jobs, which shows the labor market's cooling. Just another example, I guess, of the labor market cooling. So back in 2022, there were over 2 job openings for every unemployed person. Today, well, it's basically 1 to 1, and that is a big shift towards a more balanced or even tighter market. So here's the bottom line on this topic. We're seeing less hiring, we're seeing fewer openings, and slower wage growth. All of that points to an economy that's starting to tap the brakes just a little bit. Now, the Case Shiller Home Price Index, the gold standard for home values, it showed a small monthly decline in July. Now, prices are still up 1.7% year over year, but that's down from June's 1.9%. The FHFA index, which tracks only conventional loans, they actually showed a small monthly dip too, but a 2.3% annual increase. So, yes, home prices are still higher than last year, but the rate of growth is slowing a little bit. Now, if mortgage rates continue to drift lower, demand will pick back up and probably start nudging prices upward again. But for now, the market seems to be catching its breath just a little. So here's the good news. Pending home sales jumped 4% in August compared to July, and they were up 3.8% year over year. According to the National Association of Realtors, this measures signed contracts, not closings, which means it could be a little bit of an early indicator for what's ahead. Now, the rebound lines up with what we saw in new home sales. Now, according to the National Association of Realtors, this measures signed contracts, not closings, which means it's a good early indicator for what's ahead. That rebound lines up with what we saw in new home sales. Both were boosted by a slight easing in mortgage rates through late summer. Now, if rates stay in check, we could see even stronger existing home sales reports throughout the fall. All right, who's ready for the family hack of the week? Well, my friends, it is actually National Cookie Month, and if you need an excuse to fire up the oven, I've got you covered. Check out these pumpkin spice chocolate chip cookies. These things are soft, they're chewy, and they're perfectly fall. So, hey, I'll have the recipe and the directions down below in the YouTube description. They are just as easy as they are addictive. So, here's what we should be looking at this week, everybody. With the shutdown still in place, weekly jobless claims and other economic reports are likely going to stay delayed. We will, however, get fresh home price data from ICE and Cotality. Now, that'll help confirm whether this slowing price trend is temporary or the start of something bigger, maybe. For the technical picture, mortgage bonds are lower on the news out of Japan, but they're finding support at the rising trend line that was set back on August 22nd. Now, they're also battling over a new 25-day moving average. Closing above the 25-day moving average today would have been pretty darn wonderful. Now, the 10-year Treasury has broken above the 25-day moving average as well, but it's finding some resistance at the following trend line that was established on August 22nd. So, in plain English, if bonds can hold the position, rates may have a little bit more room to improve in the short term. So, to sum it all up, jobs are slowing, home prices are steady but kind of cooling down, and housing activity is starting to show some life again as rates start to ease a little bit. So, if you're thinking about buying, refinancing, or just trying to understand where the market's headed, this is definitely the time to stay plugged in. And don't forget, the Shoemaker Loan Team offers the Hero Loan through the Home Foundation. It's designed to give back to our military, firefighters, and police officers by making heroes' homes a little bit more affordable. So, if you are one or you love one, we're here to help. Now, if you enjoyed this content, please like and subscribe. And if there are any other topics that you'd like to hear about, shoot me a message and we will jump right on it. I'm Doug Shoemaker with the Shoemaker Loan Team, here with some fun, honest, and educational mortgage advice every week. I'll see you next time.